Today is a big day, and I thought that we would go live to talk about it. Today being November 15th. And just in the last hour, the President of the United States just signed the infrastructure bill. They were on the South Lawn, watched him do it. I know there was a celebration for what the bill is bringing. I have no comment related to that. The reason it's a big date today is that officially the end of PPP. We still need to get PPP forgiveness, but it is also the end of the employee retention tax credit as it relates to the COVID pandemic. So it's a historic day. And the reason I say that is that the employee retention tax credit, as well as the Paycheck Protection Program and the EIDL, all those that were put into play related to the pandemic have been huge for America, for small business owners, for the individuals, for the employees, employers. And it really was something that was extremely unique. It's probably why you discovered my channel to start related to these things that I'm talking about right now. The Paycheck Protection Program came into play in law March 27th of 2020. The first amounts that were paid out for the PPP were just within about 10 days. And then we know it was replenished in April of 2020. It ended in August of 2020. And then with the Appropriations Act, there was PPP 2, and we learned about round 1 and round 2 and how you qualified for that. There was also the employee retention tax credit, which I'm being very technical. It's around for other reasons, but the employee retention tax credit was applied to those businesses affected by the pandemic. And it was for the businesses that were closed or partially closed or their gross receipts were down. Now, what do I mean that it ended? So I've done a few videos on this, but let's just clarify what this means and why it's important for you to understand it from the standpoint of, well, where do we go from here? What do you do? What is left? PPP forgiveness. You can still get the employee retention tax credit when we're looking at it before the law went into play for the infrastructure, meaning you can still get the employee retention tax credit for qualified wages and qualified health insurance that were paid to your employees from March 13th, 2020 to September 30, 2021. So you can still get it for that time period, but it's no longer available for the fourth quarter. Was available for the fourth quarter. Believe it or not, the infrastructure bill ends it retroactively. Yes, we'll need to wait for some IRS guidance. But what's important for us to know on the PPP and it ending is that there's going to be monies going back into it. What do you mean? Well, there's a tremendous amount of fraud. The House committee in Congress estimates it at $84 billion of fraud that will be maybe partially recouped and put back into the PPP program. And then there's going to be plenty of people that just simply got too much Paycheck Protection Program. They either got it inadvertently too much or incorrectly, or they based it on information that was an estimate, and the reality is that they're going to have to pay some of the PPP back. So with the Paycheck Protection Program, it's just that. It's a program. It was a fund that all the money, yes, was depleted. All the money was given out when it was put into play in March of 2020, when more money was put in April of 2020. Believe it or not, there was money left over when it ended in August of 2020. So that money that was left over, to my point, was then used towards PPP 2, which is what we got in 2021 and in the Appropriations Act that was put into play at the end of December of 2020. It included more money going into the PPP 2 program. So with that, just like anything else, if there's a program, money goes out, but if money comes back in, with a governmental program, then you're in a circumstance where then that money can only be used for the purposes of that program. The infrastructure bill permanently rescinded the PPP program. In the body of this video, I give you a link to the HR bill that was signed, otherwise known as the infrastructure bill. And it also, in the body of the video, I give you the specific sections if you so choose to want to read it yourself, but it says that it permanently rescinded the Paycheck Protection Program and any unobligated funds. So money going back into PPP through fraud recovery or repayment would be then unobligated funds. And those then are no longer in the PPP program. So the government will obviously still recoup, get paid back anything that was loaned out too much. And they're going to get back as much as they can any of the amounts that were given out fraudulently. Those monies, though, that come back in, I'm assuming pay for the infrastructure bill, but it goes back into the government. And that's really irrelevant. What's relevant is that there's no more PPP program. So any money going back in doesn't now go back into the PPP. It just goes back to whatever Congress has now designated those funds to go towards. Why is this important for us? Well, there have been a number that were waiting to see if we get PPP 3. Why would we even get that if all the money was paid out in May? Well, because of what I just told you, money going back in. Who would have most likely benefited? Just a hunch that it would have most likely benefited those that filed the Schedule C. So not to scratch on a old wound or something that's still healing, so to speak, but we know that those that got PPP late in March and in April and through May when it ended, if they filed Schedule C, they were able to get PPP based on line 7 versus line 31 of Schedule C. Well, even if you don't know what line 7 and line 31 is, what you could guess is line 31 further down on a tax return is going to be what it is, the net of a Schedule C filer, which is a self-employed individual. It's the gig worker. It's the single member LLC that files a Schedule C. It's that sole proprietor. And when you could get PPP later based on line 7, further up that tax form, well, line 7 is gross income. So obviously those were able to get more. Now it was still limited, even that new provision that came into play was still limited to $20,833 per self-employed individual. But nonetheless, there were, I don't even know the number, it has to be millions and millions of Schedule C filers that didn't get all that much or got nothing when it was previously based on the net income. So for the self-employed, for the sole proprietor, the Schedule C filer, the gig worker, we're just back to where you were when you first started your business, your side business, your hustle, or it's your full-blown business, and for whatever reason your tax advisor is still letting you file it on Schedule C, which you need to be looking at whether or not you should file as an S Corp, but that's neither here nor there. It's to say, when you started your business, whether it's big or small, whether it is big now or it went away and now it's back, but when you started that business, you never in your wildest dreams thought that you would be going through a pandemic, number one. Number two, you probably thought never in your wildest dreams that we would be in a situation where the government would dictate that we needed to shut down. And you definitely, in your wildest dreams, never thought that you would be getting government money to help you with your business. Now, the reason it was given is obvious. There was a pandemic. The governments were dictating for businesses to close, and to make up for that, the PPP was given out. Now, related to the employee retention tax credit, that is something that was huge going into 2020 because it's a $5,000 tax credit max per employee. And then when we went into 2021, it was $7,000 max per employee, but per quarter. So before the infrastructure bill that was signed into law in the last hour, the employee retention tax credit was $7,000 per quarter, including fourth quarter. So that would be a total of a max $28,000 tax credit per employee for 2021. So that tax credit, based on the law that was signed today, is no longer available in fourth quarter. So the tax credit per employee is a maximum of $21,000 for 2021, because it would be a maximum of $7,000 in quarter one, a maximum of $7,000 in quarter two, and a maximum of $7,000 in quarter three. And now there is no credit available in the fourth quarter. Now, what are we going to do? Well, I've got a video that came out at 3 o'clock today. You can listen to that. I go through it in a little more detail. But at the end of the day, what we need to do is follow what the law is, which the law right now is that the credit ended September 30. So first, you need to stop taking the credit or taking advantage of the credit. So stop reducing down your payroll deposit. Don't file a Form 7200. I doubt the IRS would even accept it. Now, as it relates to those that were already either planning or took advantage of getting the employee retention tax credit, some may have already reduced down their payroll deposits in fourth quarter. Some may have already filed a Form 7200 with the IRS, which that form, when faxed to the IRS, tells the IRS that you are planning to qualify for the employee retention tax credit and you'd like an advance on that, and then the IRS would typically send you a check within about 10 days. Now, the employee retention tax credit is only available on wages, only available related to W-2 wages. So the self-employed, based on their self-employment earnings, do not qualify for the employee retention tax credit unless they had employees and then on that. So what we're looking at here is what we do now. Well, what I hope you do is continue to tune into my channel from the standpoint we still have the business of PPP loan forgiveness to take care of. Most have probably already filed for PPP loan forgiveness if they got it in 2020. Many are still waiting to file for PPP loan forgiveness if they got it in 2021. The big thing I want you to note, and I've got several videos on this, one that's coming out tomorrow, is that the PPP loan forgiveness application is due 10 months after your covered period. I'll say that in easier terms. You take the date that you got PPP plus 24 weeks plus 10 months, which is really almost 16 months from the date of disbursement when the application for forgiveness is due. What you want to be clear on is that your payments are deferred during that 24 weeks plus the 10 months. Now, no one should be waiting. I don't know why you would, but no one should be waiting to file now for PPP loan forgiveness especially past this 10 months. Now, the 10 months would be mid-June of next year, because the earliest anybody got PPP2 was mid-February. And the earliest that a 24-week covered period would end would be mid-August. And therefore, 10 months from there would be mid-June 2022. So payments are deferred until then for those PPP loans that were given in 2021. So the banks are pushing for you to file for PPP loan forgiveness. If you've listened to my channel, I've been telling you to hold off from filing for PPP loan forgiveness if you got it in 2021, because we wanted to see if there would be anything else that would be given out related to PPP. Why was I under the impression that there could be more to come of what I told you at the beginning of this video, which is money is going back into the PPP program? Money that goes into a governmental program can only be used for what its intended purpose was set out by Congress. So with PPP ending, there is no possibility of more PPP unless Congress comes up with a brand new program, which that is not going to be the case, given that they just ended it in the law that was passed today, the infrastructure bill. Now, related to the PPP for those that file for forgiveness related to 2021, Why were we waiting? Well, as I indicated earlier, what we saw in the past was if you filed for forgiveness, you were sometimes left out in the cold in some areas from getting PPP2, or there was a delay in you getting it, etc. So we learned that there was a benefit to waiting to filing for forgiveness in case they came up with more PPP to give out to small business owners. So with no PPP fund, no PPP monies that would be allocated to this fund because it was permanently rescinded in the infrastructure bill today, then you can file for PPP loan forgiveness. Now, it doesn't mean that you should do this haphazardly or quickly. You need to be smart because this is money that you got that has no tax effect. Whether you got PPP in 2020 or you got PPP in 21, it does not count as income. It does not reduce down your deductions. The forgiveness amount does not have any tax effect no matter when you got it. The second thing to note is that if you got an EIDL grant in any year, the Appropriations Act that came out at the end of December indicated clearly that the PPP loan forgiveness is not reduced by the amount of your EIDL grant. All great news. Now, related to the PPP loan forgiveness, they have simplified it. As you know, they have now 3 different forms you can file for PPP loan forgiveness. All of Form 3508, one's an EZ, one's an S. Now, for many, especially for the self-employed, they're filing a Form 3508S if they got $150,000 or less. What I want you to do is not do this in a lazy manner. Just because PPP's over, you want to make sure that you do still get the benefit that was allotted to you with PPP, and that is that it is forgiven. Now, for most, the time period for you to actually do anything about it is over. But what's key is being able to take advantage of the Employee Retention Tax Credit and the Paycheck Protection Program. Now, if you're saying, wait a second, JJ, didn't you just say the Employee Retention Tax Credit ended September 30? Yes, clarify. Any wages or health insurance paid by the employer after September 30 no longer qualifies for the Employee Retention Tax Credit. Any wages or employer paid health insurance that was paid between March 13th, 2020 and September 30th, 2021, those wages have already been paid. That health insurance has already been paid if the employer paid it. And if that employer qualifies, they still can get that credit for those wages that were already paid. Now, many are foolishly and simply and haphazardly and possibly even advised as such to just fill out their PPP loan forgiveness application and just put the full amount of whatever the payroll is and hurry and get forgiveness like it's on fire. So let me be clear, the PPP loan forgiveness application is not on fire. If you've been listening to me since the beginning, what did I used to say? Is your house on fire? And if your house is on fire, what would you do? Well, guess what? Hopefully your house is not on fire, meaning your business, but when you go to PPP loan forgiveness, that thing is not on fire. It's not a hot potato. It doesn't matter that the bank is pressuring you. It doesn't mean that you wait or you put it off, but what it does mean is that you do it properly, because once the SBA determines your forgiveness amount, if it's not fully forgiven, that's what it is. Now, the other thing is that people are unfortunately getting lazy, and you will see me roll out a number of videos going through the PPP loan forgiveness application. But people are also just assuming they're going to get PPP loan forgiveness if they just put it down. Hopefully what you've seen through FBI arrests, through people going to jail, through headlines of people not doing it properly, you are not just lazily, haphazardly, just putting numbers down or just seeking full forgiveness, not even knowing if you got it, or you know you didn't, but you're just putting the full amount down. And it's easy, human nature, to go, well, it's just fully forgiven, I'm putting the number down. What you need to know is the way that they were able to easily and quickly catch those that got PPP fraudulently is the same way they will be able to easily know and catch those that put in for PPP loan forgiveness improperly or not for the proper amount. How? It's pretty darn simple. PPP most notably was used for payroll. Whatever forgiveness amount you put on that application and you say, here's the amount I want forgiven, you need to have used at least 60% of whatever amount you've put down for payroll. If you didn't have payroll that matched what is 60% of your PPP, you wouldn't get forgiveness. But how would the SBA even know that? Because you pay wages on a Form 941. They get reported then at year end on a Form W-3 that trickle down to W-2s. It's all something that's disclosed. For 2020, it was already done at the beginning of 2021. For 2021 wages, it's all going to be done in the first 30 to 60 days, depending on the size of your business, being reported to the IRS. The SBA is going to know 100% easy what your wages were. They're going to have Form 941s to know what it is quarter by quarter. So I'm not accusing or indicating to you that you would knowingly or you have any plans to do anything improperly. Of course, I'm not saying that. What I'm saying is make sure it's though done properly, because they are going to be able to verify it. For those that are filing the PPP loan forgiveness as a self-employed that filed the Schedule C, they're going to 100% know if the amount you put down is right, because the IRS will report to the SBA already what your Schedule C was for 2019 and 2020. And they already know what line 7 is and line 21 is. And your forgiveness, assuming you have no employees, is pretty simple. Depending on how you got PPP, you take the applicable line item. For most of you, it was line 31. It's divided by 12 times 2.5. That is then your forgiveness amount. So I had a video that came out last night specifically talking about this to the self-employed. But with the PPP loan forgiveness application, let's make sure that you dot your I's, you cross your T's, make sure you get the full forgiveness, as well as then taking advantage for those that qualify, those employers that have employees that pay employees on a Form W-2. Those are the only kind of wages that qualify, because those are the only real wages that qualify for employee retention tax credit. But make sure you're getting that as well. Many are missing this. Hopefully you've been watching my channel, you haven't. And in the body of this video, I have a link to a seminar that I'm doing. I have a seminar coming out on Monday, a week from today. If for some reason you're watching this after Monday, November 22nd, you can still click on the link and you'll be able to have access to go back and watch that seminar. In that seminar, I also walk through how to maximize getting PPP loan forgiveness and getting the employee retention tax credit so that you do it all properly. So what's left right now is the economic injury disaster loan, that program for those that have suffered from the pandemic. That opportunity to get those loans for those purposes or those reasons ends December 31st of this year. So you would need to apply for that. I wouldn't know yet if you've already made application and it's in process. If it doesn't get processed by December 31st, are you out in the cold? I doubt it. But I'm going to be doing a series of videos as well, because I've been in the minutia. I've been in the fine print of the economic injury disaster loan, and I think there's going to be a reckoning in 2022 for many having to pay that back in an accelerated manner because of how you really were supposed to qualify for the economic injury disaster loan, and how they're going to know if you were in a disaster or still in a disaster, because the EIDL, when you look at it and you look at the standard operating procedure, is only for the time period that you are in a disaster mode. And when you come out of disaster mode, you are not able to continue to use those funds. So you can pull out your agreement and say, well, where does it say that? Well, it's going to be in the standard operating procedure. So I'll have some videos walking you through that. I don't think you need to start peeing down your leg and get all worried and lose sleep and freak out. But what you need to do is, if you've recovered, your money is sitting there, you haven't used it, you're back up and running, which is great, then don't use that money until you really get clarification and comfortable that you can use it. Because again, it's economic injury disaster loan, not just here's money for small businesses. So there's going to be a reckoning. We will be focusing in on that to keep you safe. So what are we doing as we go forward? 3 things on this channel: PPP Loan Forgiveness, the Employee Retention Tax Credit, ensuring that you get it for while it was in play, as well as then tax planning. You probably know this, but I'm a certified public accountant practicing CPA with my own CPA practice. I've been doing this now over 28 years. Here in a few weeks, I'll be able to say I've been doing this for over 29 years as we go into 2022. We're going to be doing some serious tax planning. One of the things that makes me unique, I think, in working with my clients is that I try and think outside the box. There's no magic tax deductions. There's no, oh, if I file this form, I get to somehow deduct this, other than one thing, which is the qualified business income deduction, which is just a simple calculation and you get the deduction. But for small business owners, it's about what did you spend for business purposes on or before the end of this year? That's your deduction for this year. How do you affect your tax bill for this year? You have more expenses this year and less income. You have to do what makes sense economically first. You don't just go spend money to save taxes. Why? Because the only taxes you're going to save on any tax deductions is the tax rate that you have times that deduction. What does that mean? So if you have a $10,000 purchase of equipment, it's not going to save you $10,000 in taxes. What it's going to save you is $10,000 multiplied by whatever your tax rate is. Assume your tax rate, let's say for grins, is 25%. So if you spend $10,000 on equipment, it's going to save you $2,500 in that example, but you still spent 10 grand to save $2,500. So typical tax planning with my clients is, well, what are we going to spend anyways at the beginning of 2022, and would it make sense to pay for that before the end of the year? Because cash basis taxpayers get to deduct what it is that they've paid for when they pay for it, as long as they've used that expense up in the next 12 months, so you can prepay. The other thing is, how would you reduce down your income? And no, you don't get to just put a check in the drawer. But if you are, for instance, billing clients, you could delay billing the clients so that you collect those monies in 2022, because a cash basis taxpayer doesn't recognize income until they collect it. Of course, you wouldn't want to do that if it makes no economic sense. Really, the key to tax planning is 2 things. The first is, where do you actually stand for this year? How does the tax picture look for this year? And the easiest way to know that is, well, what was your tax picture last year? And what does that even mean? Now, many want to laugh and giggle and slough it off and say, oh, well, I got somebody for that, or, well, that's just all above my head. And that's just silly to say that. And it's not actually big time to even say that. What's big time is to know what your tax picture is. What's big time is to know the 2 simple line items to look on a tax return that I would assume anyone that knew how to read numbers could find the line item. So even if you don't know how to read English, there's a line item on your Form 1040 to tell you what your taxable income is and what your total tax is. You literally can just find it by looking for the number. So most kindergartners could get a Form 1040 and go to the line item to figure out these 2 key lines to figure out what their tax picture was in 2020. And then all you do is, what's the difference in 2021? And then what is that tax difference? And it's pretty simple. Whatever your tax difference is multiplied by whatever your tax rate is, that's going to be your difference in tax. The second thing that you look at when you're doing tax planning is, what is next year going to look like? So if this year was not that great, and I hate that if that was the case, then you might feel like, well, next year is going to be better. So it might be better to not prepay expenses because your deductions would be worth more next year. You may not want to have income collected next year if your taxes or you have more income that's going to be taxable in 2022, because if you recognize it this year, there's less tax. So tax planning is more, what is it that I'm expecting for this year? What do I expect for next year? But then guess what? You know what no one ever talks about is tax strategy, right? You probably have someone that prepared your tax return. Hopefully so, especially for small business owners. And you probably have someone that you're doing some tax planning with. Do you have anybody that you're doing tax strategy with? Well, that's what I'm going to be bringing more hardcore to this channel in a lot of different ways. So in the body of this video, I also have some upcoming tax seminars, pretty inexpensive, that you would be able to attend. I have a number of times that you can go, and I'm going to do an individual tax update and how to take advantage of current tax laws, and I have a business tax update, and I have an employee retention tax credit seminar, as well as then a all-encompassing federal business individual tax update. With that also being said, I will be putting out videos talking about year-end planning, and also a lot of focus into the self-employed Schedule C filer. So with all that, that was all pretty serious, Amanda.
Well, that's pretty serious. And I want to apologize to everyone. And I know that our connection is at times acting weird. I don't know. We're all connected and stuff, but every once in a while you go blurry.
Oh, okay.
And then you come back and then you're in and out a lot. So.
Well, for those of you that have been tuning into my channel for a long time, we don't usually go live and it's somber.
Yeah.
But I wanted to go live, and it is somber for me because the era of PPP is over as of today. And I knew it was coming, and I'd been waiting to see when it would get signed into law. And then I wanted to come to you soon after it became law and when PPP is rescinded to also say thank you for allowing me to be in your living room, on your phone, in your car, at your office, maybe in your earbuds while you're working out. I know Tom, for instance, does that. I want to thank you for getting me to where I am now, because before the pandemic, I did have a YouTube channel and I had 2,500 subscribers. I had pretty much stopped doing videos on YouTube in 2020. I had done a bunch of videos in 18 and 19, and when we got into 2020, I said, you know what, I don't really think we're going anywhere with this. And when the pandemic hit, I was putting together videos, and if you've been following me since the beginning, many of you have, you know that in the beginning I didn't even have thumbnails. I had no description. I had 3 words. And the reason for that is the reason I put together videos and put them on YouTube was so that my clients would be able to watch and calculate and get the PPP the moment that it came out. Now, I never had done that with my clients before. 28 years, I never sent my client a YouTube video and said, hey, watch this and here's how you get it, ever. But you know as well as I do, we were in a panic. Houses were on fire. And PPP, we knew was going to go up quickly. So luckily, every single one of my clients got PPP the first time it was available, the very first time. And we know that Darkwater Megs, for example, was one of those that had a tragedy and had one of the first applications in at his bank and didn't get the money in that very first initial amount of money that was for the PPP in early April. Now, thank goodness they put more money in PPP in April, and Darkwater Megs, for example, was able to now get the PPP, probably like many of you. But with that, putting together videos for my clients, you all started tuning in, and banks started tuning in, and I got to know a lot of you. And what I want you to be clear on is I want to continue to know you. I want to continue to be here for you. You have made me, first coined by Justin McAuliffe, but you have made me America's CPA, and I'm going to take that and run with it. I can just say I'm America's CPA because I'm an American and I'm a CPA. But you have also really shown me that I do have some pretty good information by the number of views that I get, by the number of subscribers that I have now, which is over 76,000. We're about to hit 77,000. I'm so thankful for that. And I'm thankful for those of you that just tune into every single video. And I'm thankful for those that have come to all the seminars that I have put out related to all of these issues. So coming out of this 2021, coming out of the pandemic, what I'll be doing is continuing to do seminars. I'll be announcing and offering a membership with my YouTube channel for very, very, very little, but it'll have the kind of videos that really not very many of you are interested in, probably those that are tuning in live are, which is deep dive tax planning, deep dive things that are related to things that I put into my book. So it'll be very nominal, so pay attention to that. But I want to thank you for getting me to where I am today on YouTube. And that allowed me to elevate where I'm able to provide seminars. Before I met you, I provided continuing professional education on behalf of, in my opinion, the best CPE provider in the country, Surgent. And I traveled around the country in 2018 and 19, and believe it or not, in 2020, before the world shut down, so in January of 2020. And Amanda and I went around to over 50 cities and teaching thousands of CPAs, literally face to face in the room, and presenting to them the latest tax laws and strategies so that we could all get our continuing professional education. Now, when we set out to do this, the YouTube channel in May of 2018, Amanda and I, we really wanted to build up the brand of JJ the CPA. And in 2019, I wrote and released my first book, JJ the CPA, which is the top 60 questions over the last, at the time, 27 years of practice. And this right here is something that has helped a lot of you. And thank you for your support in buying this book. We also know that Amanda and I, along with Masterminds 2019, we put together a song, JJ the CPA, and it's on iTunes. But guess what? That was also in 2019. In 2018, I trademarked JJ the CPA. We did a lot of things to put together the brand of JJ the CPA. It took me around the country. We did posts on social media 3 times a day, 7 days a week. We did all kinds of things to try and get attention on social media by providing information. And when we built the brand, JJ the CPA, we felt as though that it would help provide a image of you've never met a CPA quite like me, which is going by Amanda when we went to shoot our very first video in May of 2018 for the YouTube channel. And what I'm telling you is that we put a lot of time and effort and weekends and hours and evenings and travel into JJ the CPA. I'm Joshua Jensen, CPA, but JJ the CPA, we wanted to brand and present and be the face of the CPA industry, in the sense of there is no face of the CPA industry. We wanted to encourage CPAs. We wanted to encourage CPA candidates. We wanted to help businesses, small businesses, and continue to help my clients. And what I'm telling you is we did all that work and we pretty well left it on the table, and we were just about to walk away from it when the pandemic hit. And only because I already had a YouTube channel, like I told you earlier, that I put together these videos and sent them to my clients, but then you started to discover them and you told your friends about it and you sent links. And if you actually look back at the very first few weeks of the pandemic, there were no social media posts. You can go back and see my videos. There were no thumbnails, there were no descriptions, there were no tags, there were no cards, there was no end at the end. It was just a picture of me and a few words to tell my client what that was about. But because of you, you kept being interested. And then I created a website, jjthecpahelp.com, to provide out worksheets and have a central spot to get all the forms, and tried to do as many videos as I could, staying up all night, reading the bill. And I loved it. I loved it. Why? Because I love being a CPA and I love helping people. It's one of the things I learned from my grandfather, Omar Abbott Slater, CPA, the late Omar Abbott. So what I want to do is say thank you so much, because guess what? You took us here. We didn't get here because we had a song on iTunes. We didn't get here because we had a brand. We didn't get here because we had a trademark. We didn't get here because we had a book. I did write a second book. It was after the pandemic. We didn't get here because we did unique social media posts and then you came to check us out. You didn't get here because we bought subscribers. You didn't get here because we bought followers. Honestly, you drove your way to this channel. You supported me by being a subscriber. You supported me by being somebody that viewed it, and your tenth of a penny for your view and everybody else's adds up. Now, with that being said, I'm just so grateful to be in the position where I am. And what I don't want to do is now waste this opportunity that really you've given me. And what does that mean? So I want to continue to have content that you can rely on, that you can get information from. Being a certified public accountant, I'm obligated to actually present the best information that I can because of my fiduciary duty to the public, if you will, being a certified public accountant. So I want to continue to do that. I want to help you through the Ppp forgiveness application process. I want to help ensure you're getting the employee retention tax credit. I want to ensure that you're properly using or paying back the economic injury disaster loan. There's going to be new tax law changes coming into play, most likely. I want to help you through that. But when we sit down together a year from now, there will be no Ppp loan forgiveness because it all would have been filed, most likely for 99.9% of you, by the summer of 2022. The employee retention tax credit, hopefully by this time next year, you took advantage of it. The economic injury disaster loan, you will have most likely started making payments on it or soon to be. So what will we have left? What we'll have left is JJ the CPA, tax planning. Wow, that sounds boring. Guess what? It's not. Taxes is your number one expense as an individual, and it's your number one expense as a small business owner. You don't think of it that way, but it is. So if I can help you properly reduce down that expense, if you will, your tax properly, seems like a win to me. So in the same spirit of when we were during the pandemic, I do have these seminars. They're nominal amount. The benefit of going to the seminar is that one fee, you are able to attend it, get all the information in one sitting, get the PDF that goes along with it, and if there happen to be additional materials or links, getting that as well, depending on the seminar. So I'm going to be doing a number of seminars as well for those that are self-employed related to Schedule C. I'm going to do a seminar yet to be announced to complete Form 941X. I'm going to have a number of things that are coming up. So I would love it if you would continue to support me, support this channel, support this effort, support the Amanda and JJ. We do plan to go live more often to provide updates of what's going on. Obviously, they're not going to be as mind-blowing or as exciting or really as panicky as we have, but I bet you will agree with me that would be a welcomed change, to not be in a panic to go, what is it that we're supposed to do and how soon do we have to do it, because it's going to run out and it's because my house is on fire, if you will. So when we go into 2022, I want you to get the benefit of what I've been benefiting my clients with for the last 28 years through my videos. You don't have to take my seminars. I'm putting a lot of content into the videos. I want to say thank you again for getting me to here. because everything I just told you, all the work that we put into it, it got us to 2,500 subscribers, which we were very proud of. And we were excited when we had 34 views on video. And maybe if it broke 50 views back in 18 and 19. So at the end of the day, this is not a goodbye. It is the end of PPP. ERTC ended September 30. In the next 6 weeks, based on the date that this is live, mid-November, EIDL ends. But don't take your eye off the ball, because there's still more work to be done. It's the same work that you were doing before, making money, but were you taking advantage properly of the tax laws to save? So I'll be coming to you with other subjects once we're past tax season related to insurance and things to that effect. So I'm hoping that I continue to gain your viewership. I hope that I continue to earn it. I hope that I continue to grow and provide this information, because now more than ever, I want to continue to be America's CPA, and I want to continue to be somebody that you would at the end say, you know what, I think I agree with old JJ that I've never met a CPA quite like JJ. I want to thank all the CPAs and the EAs and the tax pros that have been along for this journey and still will be along for the journey. I want to thank those that are supporting me with the continuing professional education that I announced last week of providing. And that will be something that I'm now doing forever. Now, only because probably those that get to hear have listened to our channel for a long time. Most likely, those that aren't true JJ the CPA, I'm being funny. The hardcore, let's put it that way, the hardcore JJ the CPA supporters or followers or subscribers, or better yet, the YouTube family. But there's over 76,000 of them. So it's grown and grown and grown and grown and grown and grown. But I'm going to have Amanda come so I can take a quick break and just say hi to a few people. And then I'm going to come back with smiles. And I'm going to come back and we're going to give away a t-shirt. And we're going to give away a book and my other book. And I want to personalize them to you. And I want to continue to say thanks. And hopefully our somberness won't continue, in the sense of that things are going to continue to get better. Now, the only reason I was teeing that all up is that you most likely will see, because I'm just waiting for the time to do it, but I am going to post a couple of videos that have nothing to do with this channel. So I'm going to disclose to you one of the reasons that you haven't seen that many videos, especially here in the last 4+ weeks, is that I had a stroke. So in early October, I had a stroke. So what I want you to know, and the reason I'm telling you that, is that as I move forward, I'm picking one of two paths. One path is I'm just now back to being a practicing CPA, and I say thanks to everybody and farewell. The other path is that I persevere and continue this journey with you, and that will affect me being a practicing CPA. How? Well, most likely it doesn't affect you in any way, but it is going to affect. So I'm, in essence, to continue to do both, I'm having to rearrange my life. But I'm rearranging my life not to get too sentimental or too dramatic, but I'm rearranging my life because I want to continue to be your CPA on YouTube. I want to continue to be America's CPA. So with that stroke, it was very scary. As I indicated, I'm going to put together a couple of videos that have nothing to do with it. But when I was laying in bed and Amanda and I were trying to figure out what was going on, I went straight to the internet to see what needed to be done. And I will just tell you this, the difference between a mild stroke and a major stroke is 4 hours. That's it. So if you have tingling on either side and only on one side of your body and numbness and you're drooping and you're having trouble talking, you need to get to the hospital ASAP. So luckily, I had a stroke that lasted about an hour and a half. I had minor amounts that continued for the next 17 hours. Luckily, I had no physical issues. I had no physical residual issues related to that. I've been to the doctor several times. I have no cognitive issues. Right now, my issue is that I just get tired very easily. But I have no issue knowing, retaining, presenting information, which is thankful. But what it also did is when I was laying in the hospital with Amanda next to me, what it made me realize is, wow, okay, in 2022, you're getting ready to turn 50. You're going to celebrate the 25th year of you having your own CPA practice. You're going to go into your 30th year by the end of that year, your 30th year as a CPA. Your kids are grown and out of the house. It's Amanda and I, and Amanda's son, Nick, is still in high school. But what are you going to do with the rest of your life? And you know what I want to do with the rest of my life? Is I want to continue to be America's CPA. So I'm getting full night's sleep. I'm eating better. I've lost a little weight. We'll continue to do that. We're walking 30 minutes a day. I'm drinking lots of fluids and lots of water. I haven't actually been back to work other than for 2 meetings last Thursday. And I will return to work in December. So I'm really going to continue to take it easy. And I'm going to have to make some adjustments. And we're going to have a different tax season personally with my clients. So I'll still continue to take great care of my clients, but it'll probably look a little different. But I'm choosing you, not over my clients, but I'm choosing to best continue to serve my clients the best way that I can, but I want to continue to serve you. So when we started together, houses were on fire and I was hopefully helping to grab a hose from the neighbor and helping you put out that fire at your house, not even knowing it, with everything that we've been going through. And guess what? When you've gone through with somebody anything of any kind of heartache or tragedy or hardship, think how close you are. And so many of you are that close with Amanda and I. And we think about you and we just are thankful to you. So that was a lot.
It was a lot.
And I think I was more somber than I thought because PPP is over.
PPP
And
is over.
ERTC ended a quarter early, which is disappointing. So we still have work to do.
We do, and we will get there.
You want to, I know like for sure God Dozer.
Yeah, God Dozer is not even on.
Oh, he's not even on.
And can we take that off low battery? Will it mess up the...
Well,
No,
we will
that
try.
might be the-
Oh, I wondered. Well, you come say hi.
Okay.
I'm going to unplug the microphone. And I'm going to tell you this, if for some reason we go off, we'll go live immediately again. If I close this down, hopefully that won't do anything.
Yeah, I think we can just maybe drop down, but I don't know. So I wanted you
Well,
to make sure.
just
that
in
you
case
got
it's
it down.
over, it's not over, but in case this video's over, I just want to say this. Thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. All right, let's see if the technical issue. Say hi to everybody.
I'm gonna say hi to everyone, and then hi. Okay, so I'll turn this computer around so I can see.
I'm unplugging the phone.
If we go down, go down.
I'm hoping that it won't.
Alright. Okay, we're coming back. Let's see. Oh my gosh. That was it. This whole time, we have just learned that you cannot be on low battery.
Okay.
Because now I'm clear as a whistle.
Well, we even said that at the beginning.
We did.
So,
I think
hopefully-
we've done this once before, but so again, our apologies. We were trying to be good with you. That was it. So
I just see dark water names. Okay.
yep.
So who's here
So
with
I
us?
am on now. Okay. So Hi to CSR, of course. He was the first one on because he is always on. And we have Kelly Thomas and Lola and Anna and Jean McIntyre. It's so good to see you guys. And Stephen and Huey and, of course, Tony D. We've got Lords and Todd S. You've been really active and chatty tonight in chat. I love that. We have Kevin and Devonna and Abbar. And, of course, Darkwater Megs, which JJ did bring up earlier. He was one of the first ones that we had gotten in contact with that had some horrible issues with PPP whenever it first came out. And Sarah K is on, 5-star Chickable, Patricia S. Phillips, of course. He was our big winner whenever we did the Cracking the CPA book virtual book party. S. Phillips was our big winner. And we have Get Ready and AJ and Gary and Anna and PS Fran and Do It Today 7. And then I see lots of people down here commenting. Goddozer, he commented one day and said I needed to get back in front of the camera, and here I am, and he didn't even tune in. So my heart's been broken. And Tony Yu is on. Tony Yu is another Rolex guy besides JJ the CPA. And who else is on? Islam, you've been chatty too. And I think I got 51.6. Glad that you were here.
Yeah, so we've got a lot of things behind us. CSR sent us. We have Goddozer, I know is not on, but early on he sent us this tractor, and we're not going to have every single thing that anybody's ever sent us, but he sent us this tractor here, and so it's always been a part of this. Darkwater Megs sent us one of his Maglodon teeth. And we've had that. It's a historic and
it is. You guys need to go check out Darkwater Megs on Facebook and Instagram. It's pretty awesome what he does.
And we know with ROM, Imagine That Toys.
That's right. We have the Army Men,
which we have over there, and many of these Captain America things were sent from you all. And CSR sent us a number of things, and we got lots of t-shirts and hats. So yes, thank you for being on. Sorry for the video. I guess maybe that'll probably reduce down those that hear the message. But anyways, thank you to CSR and Kelly Thomas and Kevin and Devonna and Abbar and Darkwater Megs, of course, and Sarah K, Lola and Anna and Jean and Stephen and 5-star and Patricia and Huey and S. Phillips, Tony D, Tony U, Get Ready. We got Anna and Lords and Todd, AJ, PS Fran, Gary, and Dada Day 7. I think
that's right.
Mispronounced that,
but everybody was able to hear you loud and clear. Okay. Darkwater Meg said the audio was great. You were just fuzzy at times, so your message was yes.
Don't go anywhere.
Okay.
So I was just giving some just kind of a moment, right? Kind of like what they Rachel and Monica were talking about in Friends, which is it's the end of an era.
It's the end of an
era.
Yes.
So with PPP being permanently rescinded today, what we know is that there's not going to be an opportunity for people to get PPP anymore.
Right.
So obviously we still have work to do.
Yes.
But give some reflection. What are your...
He's putting me on the spot because he told me all I was going to do was get on here and say hi to everyone. So I just have to say that I truly love the community that we have built. I know that he said it earlier, but we truly do talk about you guys on a daily basis. You are a part of our lives. It's not just something that we come on here to talk about and to say how thankful we are. It's everyday life. You guys have, I know that JJ has touched and helped so many businesses, and I'm so glad that we had this as a resource, or that he was able to be that type of resource. But you guys have also touched us. to where we're like frantic and going around and doing lives and having somebody that delivers groceries to our house in the middle of a pandemic, completely unaware as to what's going on and running around the house, to where JJ is going off of 1-2 hours of sleep so he can stay up and read a bill all night so he can do videos to get them out to you guys. I mean, we lived, we breathed, we slept very little. It was all PPP. It was all about how we could help you guys. And he had such a calling to be there for the small businesses because nobody else was there for you guys. You did not have anywhere else to turn. You were just kind of left out there in the dark. And I'm so glad that he was able to be that resource for you, and that you guys, that we've built friendships over this. There's many of you that we've got to actually meet in person, or we've had Zooms with, and that you have become family to us. So thank you. Thank you for all of your support. Thank you for bringing JJ the CPA to where he deserves to be. I told him a long time ago whenever we first started this that he needs to be on top. He needs to be that resource that America turns to whenever they are looking for help, whenever the small businesses need someone to go to, and that he deserved to be that because he has such a passion for helping people, and he's incredibly, incredibly smart. And the fact that he was able to do that, that means everything. So thank you guys for supporting him. Thank you for tuning in. Thank you for all of the gifts. Thank you for the highs in the chats. Thank you for the jokes. I know we've been there and we've cried with you guys. We've laughed with you guys. We've went to bed thinking about like, oh my gosh, it makes me emotional, but like what can we do to help these people? So thank you. That's it. That's all I have.
Well, you did phenomenal.
Mwah.
Thank you. All right. So, JJ the CPA here. Hope you're doing well. Let's go. So we're going to be going live several times. We're going to be thinking about a schedule. We have one already in mind, but we're going to be trying to make sure I'm not overdoing it. But what we are going to do is that it's probably 5 o'clock somewhere because it's after 5 here in Oklahoma, so that means it's after 5 for you. Now, you may just want to grab a water or Coke or coffee or tea or a Diet Mountain Dew. But I am going to grab, in celebration of you, the finest that I have to serve. And if you were here, I would be sharing with you. But some Johnny Walker Blue. And I'm going to say cheers to, and our, I think maybe the appropriate word will be to PPP. To PPP. PPP saved us. PPP got us to where we are, and I don't mean this channel, but kept us alive, kept us afloat. Get the forgiveness, right? Make sure you get that. Don't have any tax effects, but PPP got us through. We got through this together. The EIDL, the ERTC, don't forget the family and sick leave credits, got us to here. So to PPP. Now I'm actually going to take a drink. To PPP.
Cheers.
Boom. Cheers. That tastes really good.
Good, I'm glad.
That tastes really good. Well, what's something good for us to talk about? It would be t-shirt.
T-shirts.
So I think on this one we have a large. We will be sending this out to Darkwater Megs.
It will be signed.
We got to sign it.
Yeah.
I'll sign it down at the bottom. He may not want that, but this is something that Coach put together. I didn't. But Coach put this together. There's only like 6 of them, and this is probably the second to the last one after mine. So we're going to send this out to Darkwater Megs. We appreciate that so much. I believe that we're going to send this out to Sarah Kay. Sarah Kay, I don't know if she's still on with us, but Sarah Kay sent the sweetest email. Many of you have, but Sarah Kay sent the sweetest email several months ago, and just thanked Amanda, which isn't expected and is very nice of her, but thanked us for helping through the process because she got her PPP forgiveness. But most notably, what I loved was Sarah Kay then emailed us again because she celebrated getting an award in her industry, a huge award in her industry. And without giving away who Sarah Kay is, but her business was contingent on being with people, meaning she put on venues that required people to physically show up. And she, through the pandemic and with PPP and the other things that were available to her, and based on what she told me, help from JJ CPA, this channel, she was able to thrive and reorganize her business, come back, get the do such a great job that she got an award for her industry, recognized, I believe, in the national organization that is, in essence, oversees her type of industry. So anyways, the reason for that is just a special one out to Sarah Kay related to that. And then I bet and I know that CSR has this book. And the only reason I know that is that soon after it came out, probably immediately in one of the lives, because he's pretty much, I think, every live, unless he's got something going on in the shop.
Unless he's working at the shop.
But he quoted in this book, and then there were several times he was quoting through the book. And most likely CSR doesn't need to read this book because he's probably most likely not trying to get referrals from certified public accountants. But he read it.
Yeah. And
he's just been a great supporter. We've become Facebook friends with him, and we've kept up with him, and he's just been a great, and as you indicated, I mean, we hadn't gone live in a long time, and he was first on. So I know he already has the book. I don't believe we ever sent him a signed copy, but we are going to send this one. If anything, I figured with CSR, Card Shop Reality, that is his business, he probably has things throughout his shop that are very interesting to look at in terms of, wow, you have that card, or, well, that's interesting. So maybe somewhere in the back, he could start to collect dust, but having something that sits on his shelf, maybe even like this, would be like, what in the heck is cracking the CPA code? So anyways, we want to send that out to you, CSR, everybody else. And, thank you so much, Tool Daddy 75. Thank you so much for your support. And this isn't why, but per se. Anyways, we want to send you a copy of our book. Thank you so much. You just gave $50. So appreciate that. Email us, jj@jjthecpa.com. Shouldn't be hard to remember. jj@jjthecpa.com. Give us your mailing address. Love to send you a copy of this. I'll put it to Tool Daddy 75, or let us know your name and we'll send that to you. Most likely, the U.S. Post Office doesn't know potentially Tool Daddy 75.
True.
So probably actually need his name. So
CSR has that book, but he doesn't have it signed.
Boom. Okay. I didn't think so.
He didn't have it signed.
I didn't think so. Yeah, and the other day I was going through, and what did I find? And CSR had sent us it, and should have found it before we went live. But I was like, I'm going to keep that there so that the next time I go live, here's a little man. He didn't send this, but this is from Imagine That Toys. What was it? If I can't see it right off the bat. Okay, I don't see it. Dang it. I'm arguing it as soon as we're done live. I'm going to find it. Yeah, so, well, what else do we need to talk about?
I think you covered it all.
Yeah, you know what's crazy is that we are going to be in 2022 like in 75 days.
I know it. The other day, okay, I'll tell you guys a funny story. So I'm going to make broccoli and cheese casserole for Thanksgiving. And my broccoli and cheese casserole requires Cheese Whiz. Everybody can judge it, but that's the best way to make it. So I purposely bought 2 extra jars last year because I ran around like a frantic, crazy lady trying to get it last year for Thanksgiving during the pandemic, trying to get Cheese Whiz. Well, I bought 2 extra jars. Long story short, JJ's like, well, double check and make sure they're not expired or that one of the boys haven't opened it and eaten it or something. So I pull it out and it expired in 2020.
No.
2021. But when I first looked at the date, I was like, oh, well, that's next year.
Yeah.
I truly cannot believe that it is 2022. But when I looked at it, I was like, oh, well, it's good for another year.
Yeah.
And it's not.
Yeah.
It was expired.
Yeah, you looked at it and you're like, oh, it's still good till March 21.
Yeah.
I'm like, honey, it's November. And you're like, I know, it's good till March. I'm like,
I'm 21.
we are in 21. Yeah, that's what's crazy. You know, Alona in my office, today we were getting caught up on a few emails, but she said the same thing. She says what's so weird is that for most of us, you can't really think back to 2020 and really think of big events, right? A lot of times you're like, oh, remember that big birthday party or the 50th celebration? Or, oh, remember when the kid was born and we were all at the hospital? Or, heck, even funerals and baby showers and weddings and vacations and going out to eat and all that stuff. But yeah, weird to think. I'm glad that we're coming back, that we are back in many, many places. Hopefully in 2022, we can just be past a lot of this that's causing businesses to either be shut down or partially shut down. Mm-hmm. And I know for me, what I'm excited about is that Cooper, my son, you probably know, but he had to have Tommy John surgery. He's a 6'5" lefty, 6'5" lefty. That's right. And a pitcher. And so he was set to go to Wichita State, the Shockers, to be a pitcher. He graduated high school this last May and was set to go and pitch at Wichita State, which he's still set to go. But in the third to the last game that he was set to pitch in, I think it was like 6 pitches in. Anyways, he ended up getting a full tear of his UCL, so right there in his elbow, and he had to have Tommy John surgery. But guess what? Here's the thing, and I didn't know this until after he had the surgery, but Tommy John surgery is no longer a career-ending injury. Now, you may know that. But what's interesting is that many, or now baseball programs, look at it as, well, the number one injury for pitchers is Tommy John surgery in terms of getting you out and not able to pitch or not able to perform for like a year. So you already had that. So that's one less risk for us as a baseball program if you already had it and you recovered from it. The second is, when you look statistically, MLB pitchers that have had Tommy John surgery last longer in a game, so they can have a few more pitches if they've had Tommy John surgery on average, and can play longer, as in the number of years or seasons, if you will. Point is that it's not so much that he has a bionic elbow, but they take a tendon out of his left wrist, and then they drill 2 holes right there, and they intertwine the ligament, and they put a bunch of mesh around it. And he has been working out and going through his physical therapy like a beast, and very disciplined and working out every day, getting his entire body ready to go so that when he's ready and can work out his left arm, all his arm has to do is catch up. And so with Cooper, he decided to go to Oklahoma State University just for his freshman year. He has a lot of friends that went to OSU. Oklahoma State University is just about 50 minutes north of us, so it's easy for him to get back down to the city. So I've been able to see him when he comes down to the city. And the expectation is that here in a few weeks, he'll be able to start throwing the ball a little bit. And within about 3 months of there, he'll be able to be back on the mound. Back on the mound doesn't mean he's back at full performance. But the point is that by May, full year, by May, he should be able to then pitch in a game. So he's got a team already lined up. There's a summer ball team for college players that he will be able to play with this summer. They probably do about 5 or 6 expedition tournaments, if you will. So anyways, we're looking forward to that. Wichita State said, yeah, come whenever you're ready to rock. Let's go. So they want him. He didn't lose his spot. He just basically deferred it He wants to major in accounting. He has declared that's his major, but you don't take any accounting classes your freshman year anyways. But accounting is a 5-year degree, so he's getting 1 year out of the way. He can play ball for 4 years. Maybe he goes beyond that. That's the hope. That's his goal, which would be phenomenal. So Coop's doing great. Chloe's doing great. Chloe is getting her master's now at the University of Oklahoma, master's in fine arts, so that she would be able to teach collegiately. She is a professional dancer, danced in New York, got her degree here, and she's teaching all over. She's teaching at the University or Oklahoma State University, and she's teaching at Oklahoma Ballet, which is the most prestigious in a big area for sure, Oklahoma. And then at the studio where she grew up and doing private. She just got back last night from LA, went out there to dance in a promotional video for a dance company out there, was asked to go out. So she's still excelling at that. Not married, that's fine by me, right? Not married, not engaged, no kids. My dad growing up told me, because there was 4 of us, he said, if I can get all 4 of you to graduate high school and not get somebody pregnant and you're not on drugs, I've done my job. So with Coop graduating in May, did bring a busy summer of enjoying the last time of him really being at home. We went on some trips, but I did my job because he didn't get anybody pregnant and he wasn't on drugs.
That's right.
So, oh my goodness, we got JQ Chen. I love that. Thank you so much. That was very kind of you. Thank you so much. I appreciate that. So with Tool Daddy 75 and JQ Chen, many of you have done this over the past, and what we do is we say, okay, well, guess what? Dinner's on them.
Yes.
So we appreciate that. So when we do our happy hour, right, anytime we say PPP, we got to take a drink, right? Not meant to be a drinking game, but it's kind of a drinking water, Coke, coffee, whatever it is that you're comfortable drinking. So anyways, PPP, because I need to wet the whistle, and then we'll wrap this up.
And we will wrap this up. Again, thank you guys so much for this awesome year. I know that we met underneath the most undesirable conditions. I know that many of you guys were struggling with whether or not your business was going to be able to keep its doors open. A lot of us forced to shut down and, go at home, and that's how you found us. So thank you again for all your support of JJ. He's an awesome man, and he deserves to be where he is, and I really think we're going to hit 100,000 soon.
Well,
that
would be out of my wildest dreams, because our goal in May of 2018 was 10,000 subscribers.
10,000.
Yeah. So
we're working for that 100,000. We want the play button.
Oh yeah, the YouTube play button. Well, all right. Hey, thanks to everybody that's stuck to here. Those that tuned in later, I appreciate you also sticking to here. You know I love you. Look forward to more content coming out, more content regularly, more lives, and into better health.
Into better health.
That's right.
Less stress.
Let's go. Well, that was a quick 30 minutes, right? Because I told you that we would be on for about 30 minutes.
Yeah.
Yeah. So, wow, time warp. I don't know why it says that it's
time change.
Yeah, I don't know why it's saying it's 10 to 6 here in Oklahoma.
Yes. Thank you, Tony.
Thank you.
Excuse, welcome. I'm glad that you got here, as well as Card Shop Reality and Darkwater Megs.
All right, you know what's coming next, right? Thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. All right, I love you. Have a great night.